Good morning, ladies and gentlemen. My name's Harry Caskell. Welcome back to another ShareWise webinar. Today we're joined by John Wilson, the Managing Director of TZ Limited, which is TZL on the ASX. They're an Australian technology company that specialises in the development and commercialisation of intelligent devices and smart devices. So we're very lucky to have him here today. And John, we thank you for taking time out of your busy schedule to do a little bit of a Q&A at the end of a little bit of a presentation of yours. You want to discuss some really key topics, which obviously is an exciting time for you guys there at TZ, I should say. But everyone, thank you for coming. Thank you for listening. Please make sure you use this time to, I guess, ask any key questions you've got for John. A little bit more of an interactive Q&A at the end, like I said. So put them in the chat section or in the Q&A section, and I'll try and get to as many as possible. But like I said, my name's Harry Casco, and John, thank you again.
Yeah, thank you very much, Harry. I do have a short slideshow that I can talk to. Let me share my screen and get that up on the screen, make sure that's working for you.
Beautiful.
Okay.
Excellent.
Okay.
Good on our end. I can see that, and hopefully everyone else can. If there's if anyone sort of is having issues, just put a message in the chat, and we'll try and attend to it as well.
All right. So certainly, thank you for the opportunity for basically being able to do the presentation today.
Our pleasure.
I'm going to focus on really 2025 and our focus on growth this year, give you an update on where we are in terms of the TZ Limited plan. We've got some requisite disclaimers, obviously, as an ASX listed company, so I won't go through those in detail, but the presentation will be uploaded to our website and we'll have the disclaimer information there. So as Harry said, TZ is a global provider of secure smart locking, access control, and smart locker solutions. Last fiscal year, ending 30th of June 2024, we did around $14 million in top-line revenue, of which $4 million was recurring. We also delivered a $780,000 positive EBITDA result, which actually at the time represented a significant turnaround in the company's operations. Now, the majority of our sales, approximately 85%, are in smart locker applications. What's a smart locker? Well, it's a secure storage compartment with integrated computing and sensing to manage user access or to enable the automated distribution of packages or assets. That's 85% of our business turnover. The balance of our business is our data center offering, and in this segment we provide access control electronic locking to secure data center cabinets. I'd say that we're the leading provider in Australia, as we're the product of choice with the large data center players like NextDC and Macquarie Telecom. Last July, we presented on this platform, and I signaled our intentions that we wanted to buy a tenant app company, and that our focus this year would be on growth. I'm here today to give you an update because we are delivering on that intent, and we have an imminent acquisition of a company called KeyVision. So who are KeyVision? Let me tell you a little bit about this company that we're acquiring. So KeyVision is a leading SaaS company. They specialize in property and facility management solutions that are kind of designed to simplify the provision of tenant services and day-to-day property management operations. They've developed a cloud-based and mobile application platform that provides a range of services like rental payment, maintenance requests, registering property defects, communicating and managing events, making reservations, and so on. This cloud software platform is being licensed under subscription to residential, commercial, and mixed-use projects, to the build-to-rent market, into aged care communities, and also master plan communities. All of these sectors represent high growth property sectors. Now, we expect to complete this acquisition and the transaction by end of January. Just to give you a little bit of visibility on the deal, we're paying $2.5 million on settlement, and then there's progressive installments over the next 4 years based on KeyVision actually achieving agreed annual revenue targets. The installment payments are capped in aggregate at $7.5 million.
And just really quickly to jump in there, John, may as well whilst we're on the topic. With that KeyVision acquisition,
Yes.
how is that going to contribute to TZ's revenue growth and profitability moving forward?
Yeah, so let me, actually, the next slide does give some guidance on that, right? So first, a little bit of context. KeyVision's only in their 3rd or 4th year of commercialization. So we believe they're really primed for exponential growth. So they're moving from early customer engagement to broader market adoption. Their latest wins have been really impressive. They've got an established customer base, which now includes some of the largest property developers and property managers in Australia. They've already got an established recurring revenue base of about $1 million. And I'm pretty confident that they're going to hit their first 12-month revenue target of 1.6 million. In fact, they could potentially exceed those expectations significantly. There's a really good opportunity to cross-sell our solutions. We share the same customer base and actively participate in the same market sectors. So what's really exciting as well is our ability to be able to take KeyVision internationally through our operating subsidiaries and launch that product in the US, in Singapore, and in the UK. So, you can see that KeyVision is a really great opportunity for the company to diversify its revenue and to move into a new sector of business that could have potential pull-through of our existing solutions. Let me talk a little bit about some of the other opportunities that we have at the moment. In particular, let's talk about our data center market. Now, this sector is really on fire. It's experiencing significant growth fueled by the need for AI-enabled solutions. I'm sure we're all familiar with all the AI systems that are out there, but obviously that's driving a requirement for upgraded data center facilities. Now, NextDC told shareholders at their November AGM that the local AI market was projected to grow to about $4.8 billion this year and would continue to grow at a compound annual growth rate of nearly 29% through to 2030. The other exciting thing is Microsoft confirmed an US $80 billion AI-fueled data center development pipeline, and that they were on track to spend that sort of money in the fiscal year. Now, NextDC and Microsoft are our customers. We're currently supporting Microsoft with a pilot of our secure cabinet locking solutions. Okay, these favorable tailwinds could really help us double the size of that data center security business over the next 12 months. We recently announced an opportunity with a company called SRA Solutions. SRA Solutions is a leading Australian-owned and operated manufacturer of data center infrastructure solutions, and they sell to the defense, ICT, telco, and data center markets. They're also our preferred reseller in Australia, and they serve the major data center customers like NextDC and Macquarie Telecom. Our goal is to focus on selling electronic and annuity-based software solutions. However, we currently manufacture a range of proprietary locking and ancillary hardware products to support our system solutions, which means investment in tooling, component sourcing, contract manufacturing, warehousing, and so on. It's not a capital-light business. The manufacturing licensing deal with SRA would migrate all of those responsibilities to them, which allows us to use our working capital much, much more effectively and focus on our future direction. We also have some other exciting opportunities in our traditional markets. Last year, I mentioned in the webinar our interest in the US educational sector. Now, this is a very large and attractive addressable market. There are currently over 4,000 colleges and universities in the US that are primed for digital transformation. Only about 500 of them have gone through that transformation and have smart locker solutions implemented. I really believe we've laid the foundation for strong growth in this sector. Now, for example, we've established an advisory council that's made up of some of our customers, senior executives from well-known US universities to actually run their own mail centers. Think about Princeton, Virginia Tech, UC San Diego, UNC Charlotte. We're talking about prestigious big-name universities. These advisory council members are providing us with guidance on the development of our products and what the industry needs. We want to be best in class, and I can't think of a better way to help us get there than leverage the knowledge and experience of these members. We're also in the process of developing a knowledge sharing site that's really designed for the overall campus mail center community to help them understand, learn, and accelerate that adoption of new technology. It's a great way for TZ to raise our industry profile in the US, and particularly in that educational sector. That knowledge sharing side will be populated with information from some of those council members and other sources of information to help those university organizations to move ahead. Now, based on our deeper market understanding that we've attained over the last several months, we've launched a number of new locker products and a substantially revamped upgrade of what we call our Campus Pro software platform for the educational sector, together with new mobile phone applications. And I'm pleased to say it's been tremendously successful. It's helping us build a very healthy pipeline of new orders. Another area where, as existing business is growth within our corporate accounts. This concept of digital transformation in the workplace is really taking on. And there are a lot of corporations that have a desire to create, more efficient, integrated, and user-friendly workplace environments, and that's driving technology adoption and innovation. Our leading customers are all committed to programs to enhance operational efficiency and to improve user experience. When you think of the large number of Apple, Microsoft properties, the portfolio of real estate groups like CapitaLand in Singapore, and these are our customers, the potential is there for us for significant growth. These are big enterprise customers, and as they roll out their programs to uplift their workplaces, the potential to grow within these accounts is substantial. And finally, my last slide, just to round this off, to truly scale, TZ needs to go beyond our operational resource limitations. Okay, we're a small company operating across 4 regional subsidiaries. Okay, we need to look to partner for distribution or licensing. These are, top of the list in terms of pursuing new business opportunities. Presently, we have 2 such programs underway with, dominant market players who could potentially change the scale of our business overnight. I believe that the opportunities are there for a fantastic year in 2025. The groundwork has been laid, and with a bit of luck, this could be a redefining year for TZ, and it certainly sets the tone for our business going forward. So that's my last slide. Let's open this up to questions, and thank you for listening in.
Beautiful, John. It's like you said, there's a few key topics. It's very, very exciting times for 2025. With the acquisition of KeyVision, you've got the SRA solutions. There's a lot of things happening, but I guess for you, in the next 12 to 18 months, which is what investors want to look at, the plans moving forward for that potential growth, and I guess executing it. What are the key product developments and the priority, I guess the top priorities over the next 12 to 18 months?
So I guess the first thing is extending our product range to make sure we've got the right fit. In the educational sector, what's pretty exciting is there's a big program where the universities are having meals delivered on campus to students. So the ability for us to deliver refrigerated lockers or food lockers opens up a completely new application for us. And, we've already got our first order for refrigerated lockers. And, just yesterday I quoted our first major project for food lockers at one of the universities. This is basically a massive new application area because integrating with Grubhub and allowing students to order their meals and then picking up from a locker is just a new level of convenience for the university campus. So that's an example where we're extending our product range. The other thing that we're doing is we've got a desire to be best in class in all of the segments we participate in. So for us, developing our software solution so that it's first class, we've got major upgrades rolling out across the various platforms, for campus, which is our educational sector, for our courier product, which goes to logistics, mail rooms, and corporate distribution centers, and then also our day locker software, which is for the enterprise. All of those are getting a significant upgrade to the latest version of the software, a complete facelift, an upgrade to the user experience, and adding significant more capability. Once again, what's exciting is TZ is a design-led organization. This is not stuff that we are just adding. It's done through customers telling us what we need to be best in class. So our investment is making sure that we have the products that are right fit for the segments we want to play in, and we have the right software solution so we can differentiate ourselves in what is really a crowded marketplace.
Okay, beautiful. So again, just continue to develop, I guess, the portfolio of products.
Mm-hmm.
Now, we've got one come across from Robert. Have you put much thought into the effect of the rise of AI and the impact it will have on businesses, on the business in this instance, TZ, in the medium term?
So firstly, as I mentioned, the absolute opportunity at the moment is the fact that the AI fueled technology embracing that the market is having is driving this fantastic growth in our data center business. And so that will lead to expansion programs with our data center customers. And, that's a captive channel of opportunity for us because as our data center customers add and expand new data center operations, they pull through our security products.
Yes. Okay. So it's something you've got well covered and you're on top of on a regular basis.
Absolutely.
Now, one from Peter here. Who does TZL compete with in Australia in the data center space, and what differentiates TZ from those competitors? So, what are those key competitive advantages?
So our data center product's been around for some time, and I think the thing is that it's very well positioned from a pricing perspective. There are solutions out there with the likes of ASA Abloy and other more traditional lock providers. But the data center market is really quite specialist. You're protecting infrastructure, servers and so on. The use of locks that have electromagnetic fields is a no-no. Our devices are proprietary. They're SMA actuated. There's no electromagnetic field at all with the way our devices work. So it's a very specialist area. And, when it comes to competing against the sort of the servo motor type locks that are also out there, we're very cost competitive. So, we're very, very well positioned. I think that's part of the reason why, if you go into Macquarie Telecom on a NextDC data center, you'd see that 90% of their racks is actually controlled and secured by TZ.
Right. So you I guess the differentiator is in that within itself.
Yeah, it's the fact that we're, for the value proposition, we provide a proprietary solution. It's able to fit on a multitude of rack types. It's got the flexibility, and it delivers the sort of security and compliance requirements that customers are looking for at the price point that is competitive.
Excellent. And that's, I guess, that as in terms of a growth standpoint and being able to capture more market share, well, I mean, that's definitely going to help moving forward.
Yeah, absolutely. I mean, we already have, work with the largest data center operators, but, as I say, they're expanding. And then, you've got other customers like Microsoft and so on that are trialing, piloting our solutions and so on. I mean, we're not talking about small enterprises. We're talking about very, very large opportunities. And, I think, we've been around for a while. And so we've got proven technology, good track record and credibility in this, and certainly in the data center space. And, so our ability to sell a robust and reliable solution is there and on record for these new customers.
Excellent. And just from my end, with the smart lockers, you've cracked into the educational space in the US, as you mentioned. Is cracking into the gyms and I guess the fitness industry, is that something you're looking to do?
It's interesting, this is surprising, but the educational sector is a very interesting one. We just recently um, renovated and were involved in providing a full locker solution for Morgan State University. And what we actually did was provide gym lockers
Yep.
for that university. So we're talking about, lockers for their, football players, lockers
Yeah.
for their athletic teams, and so on. And that's another new part of business. We haven't done that before. But we were able to, using our secure storage solution and mobile phone app capability, we were able to deliver a solution for them that allowed them to actually manage their gym facilities to accommodate visiting teams, visiting athletes, and so on. It's not insignificant. That was a major deployment.
Yeah, I think there's a big market for that.
Yeah, absolutely.
Yeah, definitely. I mean, the more secure, the better, and the easier and the more efficient, the better as well. So that was just a question I had. We've had another couple come through. One here from Colin. Are you proposing that SRA do manufacturing for both lockers and data center
No.
systems?
It's effectively we're focusing just on the, in our data center business, we do have a lot of proprietary infrastructure. We do have locks, we do have mounting plates, we have interconnect modules, gateways, etc., power systems, and so on. There's a lot of ancillary hardware that needs to be manufactured. It's a little bit different with our locker solution. So our focus right now is really just on those proprietary data center products.
Okay, excellent. And then in regards to the software, can that be updated within the cloud, or does every site need to be visited to update and make sure things are running smoothly?
No, we're a cloud-based solution, but that doesn't mean that we don't do on-premises solutions for customers that don't want to use the cloud. But to be honest, that's changing rapidly. Most of the customers that have on-premises solutions are wanting to migrate to new cloud programs, and our fully managed cloud service offering is really getting significant traction. Our recurring revenue is growing at 20-30% each year. So
Yeah.
we're getting great growth through those customers moving to a cloud solution.
Yeah.
And we have our software is such that we can manage upgrades, and deployments completely remotely through our cloud system.
Yeah, okay, that makes a lot of sense. And from my end, another one with the roadmap for growth, right, including geographical expansion. What is the next sort of untapped market that you're after?
So, look, there are territories that we don't have a very strong presence in. We're talking, we do have a little bit of a play in Europe, but there's a lot of opportunities for us to expand into the European market. The African market is a very big opportunity. We currently work with DSV, who's a major logistics provider in South Africa. And, we've been talking to them about the possibility of expanding into adjacent African markets with them as a partner. So, there are some real opportunities to not only look at new geographies where we don't have a presence or an operational team. Middle East is another one where we have a lot of inquiries. And also potentially doing deals with distribution partners so that effectively, instead of TZ driving the sales, we have a much larger, dominant player that has the wherewithal, the relationships, the resources to, basically roll out our solutions, extensively. So we're certainly looking at those opportunities as well.
Yeah, beautiful. And I guess another question I always like to ask, because again, it's certainly not all sunshines and rainbows, and I guess, right, there's always challenges. You look at the share price of TZ; it had a nice little jump in sort of December, and it's come back recently. But what are the biggest challenges, and moving forward, how are you going to sort of combat those and make sure that shareholders feel comfortable, they feel like they're in the best business to generate a little bit of growth? Because that's why they're invested. They want to see capital growth.
I think the first thing is that, in the fiscal year 2024, so 23-24, we lost a lot of money. And what we did was, with the previous management and the change in the way we operate, me coming back into the business, we've basically addressed a lot of the foundational issues that were causing us to not be successful. Sales focus, margin management, operational efficiencies, shutting down our Indian operation that just wasn't successful, focusing on our customer success, instead of just servicing and supporting customers, actually building partnerships. 85% of our sales last year were through established customers, right? So, you don't want to underestimate the value of customer success. So we've put those basic principles in place, and we've got a new way of operating that we've rolled out across the business. And so for me, the enabling conditions are there to help us, it's okay to grow, but if we haven't got the ability to scale and support that growth, we don't go forward. And what we've done is focus on getting the enabling conditions in place. And I said 2025 is the year for growth. It's the year that, we make an acquisition, we bring that into the fold, and we start to roll out and look at opportunities that can actually start to scale the business significantly.
Okay, so I mean, it sounds like obviously the last couple of years, 3 years, been a lot of restructuring, been a lot of mistakes that have been made, and I guess you want to be learning from those, and now you can really focus on that growth and drive moving forward. The one question I do really like to ask, everyone I have a webinar with and I host a webinar with, is if there was one thing you would like, potential investors or current investors to know, or that they might not know already, as to why they should, be a long-term shareholder and they should ride this journey, well beyond 2025, what would it be?
Look, TZ's been around for a long time, okay? But I really feel, last year we turned this business around. It's, in the history of the company, we've never sort of delivered the sort of profitability that we did last year. And that shows that when you get back to basics, we can really build a sustainable and profitable business model. Our gross margin, particularly in the United States, went from 30-something% to in excess of 50%. That has a significant impact on our profitability. So I guess what I want our shareholders to believe in is that the hard work's been done. We've laid the foundations. We've really done it tough. to get to where we need to be to establish a solid platform that will allow us to scale and grow. And now what we really need to do is basically focus on how do we get that growth. And, you know, we said we were going to buy a tenant at company, and guess what? We've done that. We've got a great opportunity. You know, when we bring them on board, our recurring revenue goes from 4 million to 6 million. And over the course of the next 4 years, that could be in excess of $10 million. That's significant, right? And at some point, the market's going to recognize that, you know, TZ's a company that needs to be looked at seriously, and hopefully you'll get you know, the market re-rating the stock.
Beautiful. Well, John, it sounds very, very exciting. And everyone out there watching, I hope you've had a lovely, lovely time, and you know, the questions you want answered got answered. I'm sure if you've got any other questions, you'd be sweet to email John, and he'd be probably happy to get in touch, or other management team at TZ. But thank you for watching, and John, thanks for your time.
Sure.
And again, my name is Harry McCaskill, one of the senior advisors here at Sharewise. So if anyone has any questions about, I guess, the stock market in general, more than happy to have the conversation. And yeah, it's recorded, so you can always double check, go on our YouTube channel and rewatch it. But it's a pleasure. And until next time, John.
All right. Thank you, Harry, and thank you to attendees.
Beautiful.
All right.